Well, still in Kenya, Treasury Cabinet Secretary Hnery Rotich has once more denied claims that the country is facing a financial crisis. Rotich told the Kenyan National Assembly today that Kenya's debt situation is way better than that of some developed economies like Japan. But he confirmed that the government will still borrow some more to dilute the country's cash shortfall, which has threatened to bring the economy to its knees.
The Office of the Control of Budget does not have any mandate in procuring any debt by the government.
A statement which ignited a political storm after it emerged that the government unilaterally withdrew 54 billion shillings from an offshore account where the 275 billion Eurobond cash was deposited. The purpose of the said withdrawal was to clear the government debts. And on Thursday, the National Assembly finally grilled Treasury Cabinet Secretary Hnery Rotich over the issue and demanded for answers over high interest rates, despite the promise made by the government just last year that the Eurobond would help to drastically lower the rates.
What are we doing? When are interest rates going to come down? Number two, what are we doing to contain wastage?
I just want to assure that interest rates are beginning to fall, and they will continue to fall to levels that will match the liquidity conditions in the country.
Appearing before the Budget and Appropriations Committee, Rotich denied claims that the country is sinking to financial insolvency, arguing that the country's debt was only 53% the size of the economy and way smaller compared to loans taken by such countries as Japan, whose gross domestic product is 3 times that of Kenya.
If I was just to give you comparative figures with other countries, Japan is 200%, but that is Japan. US,
we are comparing apples with oranges. Japan is
that is apples and apples, because it is the size of their GDP.
But Rotich announced that the local interest rates would still remain high, well, until the country contains the high inflation rate, adding that the cash crunch currently being experienced in the country will be resolved through some more borrowing.
So these are issues that makes cash planning a little bit challenging in our part, but we are zeroing in to improve that area.
But as the war of words continues between the national leaders over the utilization of the ambitiously borrowed billions of shillings, the victims of these high interest rates are still waiting for the fruits of the promise made by the government over a year ago that the Eurobond would come to their rescue. Muremi Mwangi, KTN News, Nairobi.